Hello everyone, this is Carbonomics. I'm not going to spend too much time discussing what happened to Silicon Valley Bank. Most people watching probably already know what's going on. This video is more so about what investors should take away from this. But TLDR, for those that don't know, Silicon Valley Bank has been short on cash for quite some time now because of the bank's connection to the VC world. As liquidity began to dry up through rising interest rates and the economic woes, many companies had to pull funds out of the bank. But ultimately, people believe it was Peter Thiel's call 3 days ago to withdraw money from the bank that led to its demise. In any run on the bank, herd mentality tends to take over. Silicon Valley Bank took massive losses on their long-duration bonds as interest rates rose quickly, and a confluence of several factors all led to the bank eventually running out of capital here. Now the bank is shut down and has been taken over by the FDIC, who are working with depositors to get them their money back. And the primary option being explored right now is holding an auction to see what companies might buy the bank's assets. So far, though, no buyers have emerged. So far, Janet Yellen's saying there won't be any bailouts, but we'll see how long that lasts if a larger financial contagion does occur, which would be unlikely if people don't panic sell and try to pull their money out of their banks at once. But we'll see what happens on Monday. Ultimately, I think a lot of what you'll read on social media, or just mainstream media in general, is just noise. Media is designed to scare you, online content and especially the news. It's all written to elicit an emotional response from you, just to get you to click on the content and generate revenue from ads. Most financial content on YouTube is the same way. These financial YouTubers plaster their faces looking like they're scared or crying in their thumbnails, surrounded by fire or looking homeless on the street. It's all sensationalized because it works. Human psychology is our own worst enemy when trying to invest successfully. The last thing we need to do in a recession or market downturn is to start selling every stock we have or to panic in general. If the precedent has been that markets recover and continue to increase over time, then why would selling ever be a good idea? Especially when you could be selling near the bottom as hysteria has likely taken over. I think that Silicon Valley Bank has been a reality check for both investors and financial regulators. This is the first sign of larger ramifications we could see from a rapid increase in interest rates and other economic issues. Now, I hold the opinion that SVB is likely a one-off event for now and won't cause a larger financial contagion. With that said, though, I think a situation like this will start to make the Fed question raising interest rates even more to quell inflation. With that said, there are several actions we should take in our own lives to ensure that we hold a secure position. One that will not be affected too harshly if the economy does take a hit for some time. There are a few lessons we can take away from these troubling economic times and past recessions like the Great Financial Crisis. One of the last things you want to have happen in investing is taking major drawdowns in your brokerage account or accounts. So what someone would likely want to do is build up, bare minimum, a fund that covers 3 to 6 months worth of living expenses. If you're investing like myself, then you shouldn't be living paycheck to paycheck. And this means we can build up a sufficient level of cash where, if we did get laid off from our jobs, then we wouldn't need to sell stock to cover expenses for at least some time. Next, what we really don't want to have happen is to lose our jobs, which can be out of our control in many cases. Losing your income stream or seeing your doc paid can be a big blow, because we want to keep buying stocks during the recession, not left without an income source. So our goal should be to develop skills that make us relatively indispensable to our employers, if you do work a full-time job at a company anyway. If you haven't done this already, it would be a bit late to say you could get started now, but it is something to keep in mind over time. Personally, I am a relatively new analyst at a large automotive company, so that's not a great position to be in. I work in one of the most cyclical industries you could possibly imagine that will get hit pretty significantly in any recession. So, ideally, you also find a good company to work for that has more stable revenues than an automotive company, for example. The last point to take away from all these troubling financial headlines is that the main people who should be worried are the ones that are buying into trash companies, essentially. Yeah, ones that have no chance of making money. They have poor business models. They're constantly diluting. Or even worse, they're companies in extremely cyclical industries like the mining or automotive sectors. These are the worst companies to own in a recession. And those are the people who should genuinely be panicking. What brings me confidence is owning companies with relatively strong balance sheets at or near profitability in many cases. If these are the stocks you invest in, then you won't need to worry as much if your stocks will fail or head into bankruptcy, right? If you find yourself worried about the markets collapsing and the stocks you own going under, then you might need to reevaluate your investment process in general. In conclusion, I'm not saying you should panic, but we do need to start preparing ourselves for the worst, even if it never occurs. The Fed is seemingly determined to essentially crush the economy to stop the inflation that they themselves caused by printing endless sums of money. So this has been a long time coming, quite frankly. Secure your position in your personal life and invest in good companies, and you'll be just fine. No need to panic in a time like this. But yeah, that is going to be the end of the video here. This video was a little different from my regular financial content, but if you want to see more ESG related investment videos, then I'll have some links down below about some of the stocks I personally own in the description. Thanks for watching.